unlike many other mainstream core products, when you talk about banking, for example, it's everywhere. When you talk about insurance, it's everywhere. However, when you look at Islamic finance, I think you can divide the map into 4 categories, where in some countries where it's really mainstream, in others it's niche, and in others it's still actually at a very early stage.
Equity market is driven also by our so-called earning capacity of the corporate and so on and so forth. But if I look at the numbers, it's quite alarming actually. I think if you talk about year to date, we have about 4.4 billion of equity outflow from Malaysia. But total combined last year, this year, 15 billion of outflow.
Our angle, technically, we have been a bit slower than last year, not because of anything, because from us, we don't just tap the market because of opportunity, but because of to match the asset purchase that we have.
I think the first half of this year has been tough. Tough for the bond market, tough for Darah Jamin on our own as well. Okay, I'll touch on Darah Jamin later on in terms of where we are performance, but just on the market wise, I think what the market is worried about is probably what Johan just said on the FTSE Russell review on Malaysia.
It's my first time being in it as a panel, and I find that it's a very close-knit session. I think the other panelists actually have a lot of things to say.
It's always interesting to see the local side of the story, whether it's the issuers, whether it's the investors, whether it's the regulator.
From valuation perspective, it's good because the yield is down, and then when we table to our investment panel, we are happy, but it's on valuation. So meaning that if you were to realize the valuation to sell off, where to replace
ESG and Islamic finance are actually complementary, because ESG is like Sukuk many years back, and it can be developed further if we learn from Sukuk development that we had in Malaysia and region.
Generally, we've seen, as you all know, choppy times in the first 5 months. There was a improvement in June, but if that wasn't the case, things would look a lot more bleak where we are right now.
So in terms of ESG, how it converges with finance, that's very relevant. In terms of where industries are heading, very much relevant to what audience wanted to hear.
With the concession type business, 80% of the project cost or the development cost can actually be financed. So the challenge was to actually look for a very cost competitive financing instrument.
Current problem we are facing is, in all our discussions within the firm, are about how close we are to the end of the cycle.